Most of the excitement that comes from the world of XRP is this concept of astronomically high price points for XRP. You might recognize this clip from, I guess, a famous viral clip of me talking with Versan Al-Jarrah from the Black Swan Capitalist channel about a set price dictated by the IMF for XRP to be in order for XRP to do what it needs to do most efficiently. Let's roll that clip.
When we talk about the price of XRP, we have to look at the debt. And central banks have an incentive to dissolve that debt right now. And they found a solution, which is blockchain. They actually are going to, in my opinion, based on the research, and also I can confirm this, that the International Monetary Fund has already agreed on a price before all this integration started to happen. So this was a few years ago.
Now, many people, and me included, have created models and ideas around this idea of like, how does the price of an XRP token, albeit 50 cents right now, make its way all the way up to these astronomical numbers of like 30,000, much like the growth of Bitcoin. And really, I've discovered something, I've seen something here in regulation that potentially could, if there is such a thing as a set price, could limit that set price, therefore affecting ultimately the highest price that XRP could go, and certainly not higher, right? This is kind of really limiting things, unless there are other factors involved, like a massive amount of global adoption from the individuals, if we are so allowed to invest in XRP later down the line. But also what I'm about to talk about could be the thing that actually creates the set price in the first place. So a set price theory has perhaps had an added credence as a result of this, of what I'm about to talk about. So I heard recently that the Bank of International Settlements and their Basel framework, we're going to talk about that in a second. Just if you don't know what those are, just hold on, I'll explain it. They've essentially limited a financial institution's ability to be exposed to certain digital assets. Okay? So what that means is, we're going to get into the details, but essentially, if an asset, or a digital asset, is classed as a Group 2 asset, again, we're going to get into that. If it's a Group 2 asset, you can only hold 1% of your entire value of your holdings in a Group 1 asset, meaning you can't own infinite amounts of XRP. You can only own a limit of 1%. We're going to get into all of that because that obviously limits the growth of XRP, potentially, but it also creates a set price. So let's start getting into it. So let's talk about the Bank of International Settlements and the Basel framework. So the Bank of International Settlements, or BIS, they're basically an international financial institution that create these policies and allow for cooperation between different financial institutions. They're kind of the bank of banks, where they kind of help and delegate important things to all the different banks, specifically for banks and central banks. And what they have is a Basel Committee on Banking Supervision, or BCBS, and they develop the standards for regulation known as the Basel Framework. Now, the Basel Framework, like I said, is just a series of regulations that are made by BCBS. And the point is they're trying to improve regulation or supervision and even manage risk for all of these central banks. And what is told to us is that this entity is essential for maintaining stability and integrity in the banking system. But we all know how that's going terribly. And certainly people can go down the conspiratorial route about the Bank of International Settlements too. But the Basel Framework sets out two different groups of digital assets. So this is how they're starting to now define cryptocurrencies as time goes on. So a Group 1 digital asset is as follows. These are things like tokenized traditional assets, so tokenized deeds for homes or anything tokenized, essentially, tokenized real-world assets. What also comes into that category are stable coins. And if they meet certain conditions, they end up being a Group 1 digital asset. Now, a Group 2 digital asset, unbacked crypto assets, which means the asset itself isn't backed by anything like gold. For example, fiat currency, the dollar, was backed by gold pre-1972 or something until it turned into an unbacked asset. You can also get stable coins as a Group 2 asset if they have ineffective stabilization mechanisms built into them. So if you have a stable coin that's not very reliable, it's got specific mechanisms that don't work, it will be a Group 2 asset. But if they have those mechanisms in place, it will be a Group 1 asset. So that means XRP itself is a Group 2 asset. And XRP falls within this Group 2 classification because it's not backed by anything physical or financial, like any physical or financial assets, and it's also extremely volatile. That means when institutions are actually now using XRP, they have to adhere to much stricter regulations, certainly when they're holding XRP. For use, it might be slightly different if they're using XRP as a technology, but certainly for holding XRP, there are now some strict regulations. So, like I said earlier, there is an exposure limitation for financial institutions to Group 2 assets. I hope you're following along, and if you're enjoying this, I don't really like diving back into the news and the latest things are happening. I just think this is quite important, which is why I'm doing it now. So if you enjoy this, please hit like and subscribe to the channel. We're on our way to 100,000 subscribers, which I cannot wait for. So this exposure limit has been put in place to mitigate the risks. So the BCBS have essentially set this cap on how much a financial institution can be exposed to a Group 2 asset. And so banks are actually now limited to holding no more than 1% of their core capital in these assets. 1%. I'm going to give you some examples in a second here. So that exposure to digital assets includes both direct holdings, such as like cash or derivatives, for example, and indirect holdings like ETFs or ETNs or any investment funds. So, we're including ETFs, ETNs, investment funds, cash, derivatives in this kind of direct holdings category. And it's 1% of that number that they can hold in a Group 2 digital asset. So let's look at how much exposure some of these big banks or big institutions will actually have of XRP at maximum. Because be aware that XRP is not the only Group 2 asset that these companies will hold. They will hold multiple. So understand, this is like the maximum amount that any company would ever hold of XRP if they held nothing else in the Group 2 asset category. So let's get into it. So JP Morgan is one of the largest financial institutions in the world. Their core capital is $261 billion. That's their core capital, including all the ETFs, cash, derivatives, all of that. So their maximum allowable exposure to a Group 2 asset, if they kind of allocated that entire 1%, would be $2.61 billion only. So if they didn't hold any other digital asset and they only held XRP, they could only hold $2.61 billion worth of it. So when we hear these conversations about, and I've had these conversations because we anticipated these things moving forward. JP Morgan's $250 billion in size. What if they just moved like 10% of their assets all the way over to XRP? What the price would do? Well, now we know that's not possible. It's not possible. They can only hold a maximum of 1% in an entire category of digital assets. And that won't be all XRP. There'll be other assets that are useful to them in other ways too. So again, bringing this possible price prediction down. Bank of America, their core capital is $185 billion, meaning they could only possibly have $1.85 billion in a Group 2 asset. HSBC, their core capital is 138, meaning they could only possibly have $1.37 billion in a Group 2 asset. Wells Fargo, for example, have $175 billion in their reserves, I guess. And their maximum allowable exposure would be 1.75 billion maximum. So, instead of having $1 trillion, which would be encroaching on $1 trillion just with those four, allocating all their holdings into XRP as the ultimate asset, instead of having that thought process and the price of an XRP, if that were to happen, we are now reduced to those four companies, the maximum they could possibly own would be 7.58 billion total in dollars. And obviously that is a significantly lower amount. Even that represents a tiny fraction of the total market cap of XRP. So, this is a tough one for when you think about the price appreciation in the future. Now, of course, XRP has a long way to go to get anywhere near that limit. Like we've got supply and demand dynamics that need to play out here. We need to have more institutional interest. Like stage one is that we need to get the companies, these big banks, to get to 1% exposure, or even 0.5% exposure would even be aggressive. Thinking about how it's Group 2 as a whole, so that if someone allocated 50% of all of their 1% to XRP, I think that's a massive win for XRP. We've got to take what we get at this point, but we've got a long way to get to before that's the thing. We're nowhere near there. I do know some banks that do have lots of XRP that will actually have to sell their XRP. Now, this is another thing. We've got a lot of speculation growth to happen. We've got a lot of, retail investor interest to happen to XRP. We've got a lot more institutional interest to happen to XRP. But you might be thinking, well, XRP is 50 cents right now. If one of these big banks maximize their 1%, to its absolute limit at 50 cents, so they now hold exactly 1% of their normal core capital. What happens when the price of XRP goes to $10, $50? You've just 100x'd the price. So now that dollar value of that 1% is now like 50%. So what are they supposed to do? Well, this is the thing. You cannot go beyond the 1% exposure into Group 2 assets. You cannot. So when the value of that asset goes up and it exceeds your 1% exposure, you have to sell it. You have to sell it to bring it back down to that 1%. They literally have to do that. To be compliant with the regulation, they have to continually monitor their exposure to these Group 2 digital assets and make sure they stay within the regulatory limits. Okay? So that means, XRP is 50 cents, it goes up to $1. The bank that holds those assets has to sell it to come back into their 1% allowance. This is outrageous. It's outrageous. It's outrageous. And so, they're required to sell these excess holdings essentially. Now, let me give some examples of how that looks. So a bank that has core capital of $100 billion, for example, and they have XRP they bought all of those $100 billion at 50 cents per XRP token. They've maximized their 1% exposure limit. If the XRP value increases to $10 per token, the bank would now have a new holding that is worth $20 billion, right? So they bought $1 billion and now they're worth $20 billion for those same assets. Well, the new value of $20 billion represents 20% of that bank's core capital now, and it far exceeds the 1% limit. So the bank would now need to sell $19 billion worth of XRP to reduce its holdings back to $1 billion, maintaining compliance with that 1% exposure limit. So think about what happens to the price when that happens. Think about it. Someone has $20 billion worth of XRP and they sell $19 billion worth. What does that do to the price? It drops. Completely drops, falls from the sky. Not only would that happen at $19 billion in that example, but every bank who is now over their 1% exposure limit will also have to do the same. That creates a drop of monumental volume. It's outrageous. That's probably never happened before. And it would continue to happen as the price goes up. So what does that actually create? As the price of XRP goes up, the price comes down to meet a level. There is a level. Do you see where I'm going with this? This mechanism of limiting to 1% exposure is actually potentially what creates a set price in the first place. Perhaps there is a price that the assets will stay at that will just match 1% exposure to a Group 2 asset. Do you know what I mean? So certainly you can make the argument for massive volatility, the price going up and down, because people are the people are using XRP, holding it as individuals, for example, and even as companies. Then the price of that asset increases and they have to sell it. So the price comes naturally back down to a level, which is why there is a foundational set price for XRP. So what outside of that movement actually lifts that floor up? This is what I'm wondering. I'm thinking actually potentially the speculators, the retail investors might have more of a say in this. The more adoption you have from retail perspective and from smaller businesses, not financial institutions that don't have the same 1% exposure limit, the more of those entities that come in actually build the foundation and raise that set price higher and higher and higher. That is what does it. It's the small businesses that own XRP. It's the individuals that own XRP. It's the non-financial institutions that are holding XRP as software or just for price appreciation in the future. That is what raises that floor price for XRP. And I believe with this regulation being a 1% cap, it creates a floor for XRP. certainly it limits the maximum price XRP could be, but the floor is also raising as adoption continues. And so I think this is extremely interesting. In that clip that I talked about of that IMF set price here, essentially this IMF set price could be providing this standardized value for XRP to reduce the volatility of this 1% exposure limit. And it might make it more attractive, or actually even, listen to this, a stable medium of exchange. A world reserve currency? I don't know. It's very easy to look at the set price being changed for XRP and think this is all negative. But this might actually be the mechanism, the vehicle that gets us to these set prices and these floor prices, and for XRP to be used in this way that we've always anticipated, right? So I think, because there's actually, this could even increase adoption is what I'm saying, raising that floor. Now, what do I take from all of this as a whole? Because we know that the ceiling price for XRP is now lower, but the floor price has potential to continue to rise so that XRP can do what it is supposed to do. So how do I view the price of XRP now over time? Well, certainly it's limited. Certainly it's limited on those higher price predictions now, because we just can't get enough exposure to the financial institutions. But fear not. Like I said, there is massive price appreciation to take place for XRP still. And we knew that regulations would come in to try and squeeze us out of benefiting from this. So hope is not lost for XRP by no means. Like, please don't take it that way. If you're at this point of the video, you probably understand. I'm still, nothing's changed about my portfolio with XRP, my view of XRP. Nothing has changed in that capacity. But what is super interesting here is that now that these aspirational crazy numbers may not be possible anymore, does that impact how you view taking profits in the short term? I do wonder. I think it's crucial that certainly if you have a portfolio, I'll say this, if you have a portfolio of $30,000 and up, you need a plan of action that's strategic to start to be taking profits so that you can reinvest at the appropriate times. Like I've said, a good strategy is always allowing you to hold for big price appreciation, but also allowing you to take benefit in the short term, to live your life, which is a finite life. I talk about death all the time on this channel now. Like, we're all going to die. Let's take some benefit in the short term, but hold for the long term too. It's just the idea is that long-term hold, the price appreciation of that long-term hold is now less compelling. It's less compelling because of this 1% exposure limit. So if that means you're going to hold less for the future, there is more to take profit on in the short term. So if you are reasonable of mind, you're ready to take kind of action into understanding how to take profits and what that actually entails, and you're a reasonable person with reasonable view of the future, you would love 1,000x on a cryptocurrency, but really you just want to make some money in the next bull run, I would urge you to book a call with me or my team. I don't know who you'll get on the call. I do take some calls, but you can book using the link in the description to book a call. Really, like, what is being offered in that program is a means by which you go from having no plan of action to a completely solid plan of action for when these assets start to go up. It allows you to hold, it allows you to sell, and it also allows you to become the person that you need to be to accept that wealth, essentially. So with all of that said, I'm still very positive about XRP. Nothing changes in that capacity. It's just that the ceiling has been reduced and potentially the floor has been lifted. So take that how you want. Let me know what you think. Subscribe to this channel. Let's get to 100,000 subscribers. If you want to talk with me or my team about exit strategy, the link's in the description. Goodbye.